Let's close out today's market action and what it all means with Margie Patel from Wells Fargo Funds Management, also David Cudler from Mainstay Capital Management. David, let me get to you first of all. What do you make of this comeback, and is this a trend that we're going to continue to see?
Well, it's really a pattern that we've seen since the election. We have these reasons for the market to sell off, whether it's Cyprus, whether it is a jobs number, but we haven't had more than a 3% sell-off since the election. So as soon as the market comes down 1 or 2%, those buyers come in, and it's a pattern that we see repeat. Eventually, we'll get that 5 to 10% correction, but so far, the buyers just keep coming in, the people on the sidelines waiting to come into this market.
And Margie, as that happens, and finally, after the jobs number on Friday, the yield on the 10-year headed lower. We're down to 170. I haven't seen what it was in the last half hour as the markets come back here. Do you think it will continue lower? We hit that all-time low of the 10-year at 138 last July. You think we'd be heading that low even as this market continues higher?
I think we have a good chance of testing those lows again because usually we think of low rates as a sign of a weak economy, but the other side of the coin is with other economies weak, money's drawn to the U.S. dollar, forcing down Treasury rates. So I think Treasuries might be in a little bull market and have lower yields.
And to what extent, Margie, do you feel that keeping these rates low is going to help the economy get a bit of a boost to be back up to the upside in the second half of the year?
I don't think we've really gotten a lot of help from these policies that the Fed has pursued. I think it's just that natural rejuvenation of the U.S. economy bouncing back after a very deep recession. I think the economy has all the pieces in place to continue to grow at a relatively modest rate. We've had a little bit of help because these rates have helped housing pick up a little earlier, but I think basically it's just that U.S. economy just rolling along and growing the way we always like it to be.
David, I know this oversimplifies things, but do fundamentals really matter right now when you've got the Fed backstopping us? I think about the jobs report. I think about the geopolitical concerns that are out there. I think about the Japanese, supporting their economy and pushing their own yen down, which is not great for our economy and our exports, but yet our market just continues to go higher. So do the fundamentals even matter right now?
Fundamentals matter. They matter in the long term, but central bank easing, not just here but around the world, as you mentioned, has been a underlying support for this market.